What do new cars, brand name clothes, speaker systems, vacation, and fine dining all have in common? One quick answer: government funding. No, it's not another plot for the government to give us a little bit of money to boost the economy, but it is something that everyone in this room can and is able to do. It's called a student loan. According to the finaid.org, in 2007 and 2008, the average college senior graduated with $23,000 worth of student loan debt. This is currently what I make in a year, and I thought I had a good job. The students purchase with their student loans are at their own discretion, though it is defined by Wikipedia that the money that should go to the students also needs to go towards college funding, such as college fees, costs, books, materials, and other living expenses. Some colleges try to allow the amount of money that the students get to that only allow the amount necessary to the students. Students must prove that their living expenses, what their living expenses are to receive the loans in the first place. In most cases, though, students take what they are offered from the beginning, and this amount is what they need to live on. Gets spent in many ways that I don't think the government really intended. The impact of taking too much on a student loan and spending it unreasonably for things that are previously stated affect everyone: the students, the families of the students, and even the people in the college itself. Many colleges adapt ways of weeding out the phony students for the students that are actually very involved in their education and care about learning. Stark State being one of those colleges. What they do is they weed out those students by not allowing the funds to go to students until the third or fourth week of the semester. This puts stress on students that actually are there to learn, because they have to buy their own supplies and their own materials and books for their first day of classes on their own. This takes away from the purpose of financial aid in the first place. Wikipedia explains that in the United States there are three types of student loans: federally subsidized, unsubsidized, and private student loans. Subsidized and unsubsidized loans are both government funded. With a subsidized loan, you can defer the interest in the payment to the end of your education. On the other hand, unsubsidized loans incur interest the entire time you're in college. With private loans, interest rates are set by the institution and are backed by regulations by the government. In all forms of student loans, you can pay back your student loan at the end of the year. At the end of your graduation or at the end of your schooling. To apply for a loan, you must meet standards to qualify. You must show your income, your parents' income if that is something that may be age appropriate. So at the age of 25, you do not have to do that. And you must, and if you claim independence, so if you have a dependent child as well. You also have to meet other financial means to be able to claim independent status. This determines how much your expected family contribution is. Most colleges and universities ask you to submit a FAFSA to prove this. FAFSA stands for Free Student Application for Financial Aid. And in most cases, this is mandatory for government funding. With a quick series of questions about you, your parents, and the money between you, FAFSA arrives at a number. That number is your expected family contribution to your education, which is for each semester of this school year. The rest will make up your financial aid package in terms of scholarships, grants, and loan money. The grants and scholarships are not to be paid back. FAFSA defines financial aid as the difference between college cost of attendance, including the living expenses, and your expected family contribution. Once you fill out your form for college, the college sends you an award letter and gives you an amount. The student at that time then is able to accept or deny the loan. Most students, in most cases, do accept the entire amount. After FAFSA is filled out, you must sign and read the promissory note. This explains the terms and the interest that will occur during this time while you're in school. To receive aid, this must be completed. Along with that, it also must be signed. You must sign a PIN. You must have your PIN signed, which is given to you at the beginning of filling out your FAFSA. This assures this assures and it links the loan to you, and that does that by your Social Security number. This in turn links you to the repayment and the liability of the money that is owed to the government. Many do not realize that they are signing an actual contract when they do this. They skim through and read the fine print, do not read the fine print. In most cases, this is where it is defined how much the interest will incur and the details of the loan itself. Studentloans.gov, gives students options in consolidating their different loan options. They can also avoid ways of opting into default of their loan by means of making sure that they reach all their regulations. Many people do not do this though. So in everyone's best interest, it is the best way you must avoid the default of your loans. National credit bureaus are notified. A student and even parents in some cases can be affected by this if you do not pay. As well as the students are unable to receive any other financial aid. The loan payments can be taken as garnishments from both your income and your income tax refund. A student can be sued and a parent can be sued if you incur the late fees. And it will incur late fees if you do not follow the directions to repay. Repayment plans are also available for those who are not lucky enough to find jobs after graduation, as well as their 6 and 9 month deferment plans if you do not graduate and you do drop out. Student loans are meant for spending on educational purposes. And in conclusion, whether you're buying a car or going on a vacation with your student loans, or just buying a notebook and books, it does not matter. The fact is, these loans need to be repaid. The money that is repaid goes to future generations of car purchasers and notebook buyers. And it is a never-ending cycle of funding, and could end if people do take this to the extreme and take advantage of what the money is really supposed to be going towards. Students that are truly serious about their education and do care about their learning, we'll make sure that they understand their financial aid packages. And therefore, I encourage all of you to stay informed about what you are choosing to pick for your student applications and your student loans. Remember to keep your eyes on the prize, and that's your degree.
Yay.
Horrible.